JB here. Hope I was doing outstanding. November 14th, 9 o'clock on this fine Thursday. Really quick rant, talk about the market, some of the names I'm looking at, go from there, take a look at the S&P. Futures were slightly in the green this morning. Then we had PPI data, and it kind of just paired some of the gains. Futures, I would call it flats. S&P futures down 0.02%, so not much to speak of. Small caps are only down 0.07%, so not a big deal. And we'll have to see how things play out today. The last couple sessions have been somewhat, I would call them chop sessions, right? Tight ranges on the SPY. Uh, Yesterday, 599, 594.96. The day before was 599, 594.20, something like that. So still watching that 595 handle as support. And then once we break that 600, we're going to get a blue sky breakout, in my opinion. But we'll have to see here. PPI data in line this morning. Weekly jobless claims came in a little weaker than expected. I mean, better than expected, right? Less folks looking for looking at unemployment. So construe good, consider, well, I mean, you kind of want to have decent data, right? You don't want to have to be too strong, like Goldilocks, right? Not too hot, not too cold. And that's kind of what we got yesterday with CPI and PPI today. At 3 o'clock, Jerome Powell will be speaking in Dallas. I guess at Dallas Fed. He's going to do, I guess, I don't know if they're going to be prepared remarks, but at first he's going to speak about his economic outlook. And then there's going to be a Q&A session. I don't know if that moves market much, but certainly something to be aware of. I mean, he just spoke a week ago today, right? I mean, a week ago today, he was speaking after the Fed decision. So what has changed in a week? I mean, is he gonna talk about CPI data? I mean, is he gonna talk about He's gonna talk about possible election? I don't know. Is he gonna talk about him getting fired? I mean, who knows what? Anyway, so certainly something to pay attention to. And Disney this morning had solid earnings, almost like a relief earnings. And if you've Inside Out 2, that was the big hit movie, so that drove some of it, and it could be a turnaround. Not saying I'm going to get Disney for a reversal up to 130, but maybe that bodes well for the markets. All right, so that's overall markets. 595, 600. Then you look at the good, the bad, the ugly, right? So I would say the the bad here is small caps. So small caps were down 1.75% on Tuesday, down another nearly 1% yesterday. So 2.5% to the downside the last two sessions. Just want to see it hold at 235. So that'll be a spot I'm watching today. Then the good, right? So the VIX, despite the market, so the market was pulling back. First a pullback in the morning, then it reversed up, and then a pullback in the afternoon. And the VIX pretty much was just unfazed. It just melted and was down for most of the day, closed down nearly 5%. Right at that 14 spot, it was down to 13 and change for some of the day. So I think that, again, just it's like the air has been taken out of the anxiety balloon, right? And now the VIX is back below historical levels, which typically is 15. So those are good signs. And then I'll call it the two-headed monster for now, but the U.S. The 10-year continues to go higher, and some say it's because of deficits. Some say people are concerned that inflation might come back. I mean, of course, that's always a concern, right? But I don't know if you think back in middle of September when they cut rates, that people are starting to worry about inflation coming back, and then they were still going up before the election. So you're saying it's because of the election? Could be from deficits. Fed Chair Powell said it was because the market's starting to price in a stronger economy in 2025. I guess that could be it too. Maybe it's tariffs, right? That's the big buzzword now. Gosh, they were talking about tariffs back in Trump's last presidency when there was the big trade war between the U.S. and China. And I mean, here we are, right? A stone throw away from all-time highs. How did that work out, right? So I'm not saying that at some point the tariffs might cause some kind of inflationary pressure, but for now, I mean, it all is great headlines for folks and gives a narrative for people, especially to fear people into selling the market. All right. So that's the 10-year. And then the other two-headed monster is US dollar, which is at a year-over-year high. So I probably don't want to see this get too much higher. I mean, a stronger dollar is good for small caps, right? It's good for the U.S. because stronger U.S. dollar means when they pay the debt, it's when you have a tremendous, there's a huge budget deficit, and then you have the huge U.S. national debt. And when the dollar goes up, it costs less for them to pay what it costs to finance that. So, the cost to finance the debt right now is like the entire Department of Defense spending budget, which is insane, right? But maybe that changes. The better the economy, the better the GDP, the more tax revenue. Anyway, hopefully that fixes itself. All right, so rants for other days, US dollar. So which brings me into gold, and I put it on, I think I put it on the rant yesterday, and I put it on the watch list this morning. But, I've been bearish gold for a while. I mean, if you followed the chat room and the community for the years, but 10 years ago, pretty much almost a year, I put this out in December of 2014, and it's like the same pieces that I thought was catalysts for downside for gold still staying true, right? And one of those was Bitcoin. This is 10 years ago, and I was just saying the rise of Bitcoin over the past few years has been astonishing. This is back in 2014. So I think it's like they say never wrong, just early. So gold was at 1,200 when I wrote that. It went down to $1,000. I made some money on some puts, but then I've been trying to trade it off and on for the last 10 years. And here it is. I think it's I wouldn't call it the perfect storm, but I think there's definitely an opportunity trade for downside. So not only all the risks that I wrote about in that article, if you take a look at the watch this morning, I'll try and post a link. But then you have the stronger US dollar now, and then you have cryptocurrency is more mainstream than it's ever been. And you just have to think at some point it's going to take some of the luster out of gold, right? It's going to take it's a store of value, right? And the thing with an asset, right? Most asset classes go up over time. That's just how it happens unless the economy goes to crap for a long period of time, crazy hyperinflation. Outside of that, home prices typically are going to be higher 10 years from now than they are now. So that's just how it works. So same with gold. But at some point, I always said back when I was bearish on gold, it's like I don't think gold's a zero. I just don't think it should be valued where it is. So I'll continue to look for opportunities to trade gold for downside. I think it trades near 2,400 before the year is out. At least that's the 200-day moving average. I locked some of my December puts in yesterday just to cover some cost. I had some January strikes. I'll continue to look for opportunities to play that for downside. And I'm going to look at the miners. And I put on a watch list. If gold goes to 2,400, I think dust is going to be 110 plus. And back when I used to trade dust in 2014, it was a 3-time bear ETF. So it was a heck of a lot more volatile. And when you have the longer gold goes down and miners go down, the more parabolic the move becomes on 3 times ETFs. It's just how it works, just how they're weighted and stuff. At the same token, if you hold a 3 times ETF, every night they do rebalancing and you get killed. That's just how. So if it doesn't move in the right direction over a short period of time, you're going to get killed in your position. But still, like a dust and just the dust and J dust. ETFs don't have a lot of liquidity, so tough to find some decent risk reward strikes. But don't be surprised if I add some calls finally on either of those and or GLL. GLL is the 2-time bear ETF for gold. That's GLL. That's dust. I know you see it here at $65. I'll save this rant. Today is November 14th. Maybe I'll fast forward and I'll do a recap a year from now, and not a year from now, a month from now, and we'll see where dust is at. And maybe I'm wrong, but the one time you can be right and really to the right, meaning gold maybe goes down to $2,300. The puts on GLD and the calls on those other ETFs they'll pay off quite handsomely. All right, so that's that. So now individual names as well, just really quick. Lemonade insider purchase. I don't know, some director nearly a 1 million insider buy, which is I mean I think that bodes well. One of the purchases were in the mid 30s, but I was hoping for a green session yesterday. We had a late session pullback. Still stepping to the upside. If it breaks to 31, I'll close the last of my Decembers and I'll revisit. If it breaks 34, the squeeze resumes, and I'll add some more calls to play for a possible move to $40. Altimmune, I add some calls yesterday. I put a nice little snippet on the watch list this morning. I don't have a time to go on a quick rant, but it's $600 million company, $140 million in cash. It's similar to Turn, except Turn's studies are earlier. So phase 1, phase 2, where Altimmune has phase 2B. They have a phase 3 MASH study that's going to be coming out at the first half of 2025. So there's a lot more catalysts that are much closer to fruition as opposed to where Turn, you still have many years before any viable drug comes to market. 32% short interest. You had one of those bear companies, bear short piece. I don't know if it was Muddy Waters, was one of them. I got to find out who it was. Came out with a big short piece. I don't know if it was last year or the start of this year, saying the drug is crap, the company is crap, the directors and people in charge of the company are crap, excuse me, which to me creates opportunity. So, when 20% of your cash is tied up in the market capitalization, to me, that's good. 32% short interest. That's why you see some of the volatility. Analysts out this morning, yesterday, UBS, $26 price target. They initiated coverage. Not saying it gets there, but maybe it gets to 15 before the year is out. So don't be surprised if I add some more strikes, possibly some calls into 2025 as well. And then some other quick names. Micron just been a dumpster fire this week, down 10%, down another 4% yesterday. No big catalyst. If it holds 98, at some point it's going to do that AMD move. It's going to happen. It's just whether if I'm on board or not. So don't be surprised if I had some calls. If it starts reversing into strength, I'm not going to try and catch a falling knife because it breaks 98. All bets are off. Travelzoo, still have 2 more days to close out the rest of my November strikes. I'll add those December and March strikes. Still think this trades over $20 in the coming weeks and much higher in 2025. And then last but not least, Spotify. I had it on the watch list yesterday morning. Then I started looking at the premiums. I was trying to get some weekly calls. Those are expensive at the open. And then I was looking for the 500 strikes further out, and those were expensive. So to me, when I see expensive calls and I try and rationalize on a risk reward basis, hey, if I get a $500 call for $8, where does it have to go for me to make money? And it could be volatile. So, it just, I'm not looking for a 50% or 100% gain. That's not just how I trade. That's why I trade options. So, I'm not looking to get a contract at $8 that has a lot of premium built into it to sell out at $16, right? For me, I'd rather buy a contract that's 8 cents and sell for 80 cents, right? So if some point, if the premiums start to come out of Spotify calls today or tomorrow, I might look for some lottos into the, into Friday close. So that might be a trade. Otherwise, I'll just sit on my hands there. And that's it, folks. We got 20 minutes to the open. I'll be back rock and roll.